It's time now for Futures in Focus. Today we are talking about the euro coming off its best day in 10 weeks yesterday amid optimism on Greek talks, and today we are seeing a little bit of a hit in the euro. Remember, Mario Draghi and the ECB leaving rates unchanged. The press conference starting in just a few minutes now, so we may see more movement once that happens. Joining me now from the CME is Bob Iaccino. He's Chief Market Strategist at Tethys Partners. And of course, we're not just talking about euro spot here. We're talking about the euro futures in reaction to the ECB and to all that's been going on in Greece. What kind of sort of divergence are we seeing between the spot market and the futures market?
Well, good morning, Julie. The futures market, I think, is a little bit less optimistic at this point than the spot market is. I think what you're looking at with Mario Draghi is you're looking at that sort of typical charm, that European charm that the U.S. officials don't have. And I think he's going to be a little bit more optimistic. When you talk about the way that the ECB approached QE, let's call everything QE now, but approach QE, it took them a long time to accept the fact that that's something they probably needed to do to stabilize at least their equity markets and their currency as well and bring it to where their industries could compete. And I think you're going to see the same thing when he talks about the inflation outlook. I think that there's a lot of sort of optimistic outlooks on inflation growing in Europe. I don't think it's going to be as optimistic as Draghi will speak to, but I believe that that's the way the press conference is going to be leaning.
And yet the data that we got yesterday on inflation actually showed some inflation. And so it seems like there is actually, well, one data point at least to back up some of that optimism.
Well, I think that one data point is looked at rose-colored glasses. We're all very, I don't want to call it spoiled because it's sort of been a bad time for economies, good time for equity markets. That can be somewhat artificial. But I think when you're looking at that little inflation as a positive factor, I do agree that that'll keep rates on hold, but they're not going to be able to come out of this anytime soon. And you're looking at that versus the U.S. Fed, the U.S. Federal Reserve, who I believe will raise rates in 2015, at least in a one and done. So I still think you're looking about a stronger dollar and a weaker euro over the medium term. You could see a move to 114 with some of that optimism, but unfortunately the target, for dollar bears, is that the target for the euro is definitely 104 and most likely parity.
And so just quickly here, are you selling the euro going into this press conference today?
No, I don't do anything going into meetings like this or going into press conferences. I always wait for it to shake out. But what you're seeing is I'm a technical trader by nature, and you're looking at about a 10-year rounding top on the euro-US dollar. And what that means is that every time the euro has gone into the multi-month rallies or even multi-year rallies, it's reached a lower high than it has in the past, and it's reached lower lows than it has. So what you're seeing is a breakdown from that, and that again targets 104, 102, and even parity over the long term. So I think you have to pick your spots when you do this. But still, the strong dollar versus the euro is the trade. The only place you see euro strength possibly sustaining is against the yen.